welcome to Bunker Hill's live summit today, hosted by Six. Today I'm joined by Sam Ash, CEO of Bunker Hill, Richard Williams, their executive chairman, and David Wiens, their chief financial officer. The team's going to go into details about Bunker Hill's most recent news today, and after we'll be accepting questions. You can submit your questions using the Q&A panel found on the right-hand side of your screen at any time during today's presentation. And as always, this summit is being recorded and will be available to watch afterwards on Six.com. Without further ado, Richard, I'm going to hand things over to you to kick things off.
Thank you very much, and thank you very much for everybody that's dialing in, and for those that have come in the first time, a particular welcome on the back of what's been some very important news for the team, the mine, and the community. I just wanted, before I hand over to our CEO, Sam Ash, who's down at the mine site where he lives, just to sort of give some context for and some background that has led us to where we are now. We see ourselves as many in the mining industries need to be, as a turnaround team. And we came to Bunker Hill because it's an extraordinary value creating opportunity, not just in terms of the ability to generate sustainable profits from the sale of some very important metal, lead, silver, and zinc, but also because with its particular history, having closed in 1980, courtesy of new environmental regulations, and then been subject to a US government cleanup, it was surrounded by a community that had really been devastated by the consequences of that economic action. And we felt, having learned much in previous experiences, that by applying ourselves to this mine and the essential partnerships that you need to develop to bring it back into production, we could deliver some significant value for all our shareholders. So it's sustainable supply of essential metals via regeneration is what drives us. Where the geology works, where you have significant amount of sunk capital, which includes significant data and insight from those that mined in the past, and you can build partnerships, as we've done and you'll hear more about here, with vital agencies such as the United States Environmental Protection Agency, the IDEQ, our new finance partners at Sprott, streaming and royalty partners, and specialists such as Mine Water, whose business model is about the regeneration of old water supply, dirty water supply out of old mine sites, making it clean, good for the environment and good for business. And with all of that, we were drawn to Bunker because it's a potential to be a cornerstone asset of a multi-asset portfolio, because of its potential to be very long life, at the lower part of the cost curve, and have a low footprint with respect to environmental management and other consequences, but a significant impact when it comes to social benefits, made it perfect for the type of mining company that we, in our way, seek to develop. With that high-level view, what I'll push down to now is to the front line, to Sam, who will talk through the specifics of the immediate parts of our strategy, and then on to David, that'll explain more about the specifics of the news release. Thank you, Sam. Over to you.
Thank you, Richard. And when we look at Bunker Hill, the execution of that strategy is really quite simple and quite clear. We have a mineral endowment here at Bunker Hill that is ready-made for restart, with strong economics and a rapid, low-cost, low-capex pathway to restart and free cash flow generation for a mine life which is just the beginning in our view, 11 years. What's important to note about the Bunker Hill asset is that it operated continuously for over 100 years. And when it went into closure, for environmental reasons and not for the depletion of the mineral endowment. So we're really excited. And what we're going to focus on and the strategy of turning Bunker Hill back into a cornerstone asset is to take the mineral endowment and the historic reserves, which we have done the technical work and brought up to 43101 compliance standards. And we'll talk about that more in a minute. And start there in the upper areas of the mine, in areas of the mine that we have excellent access to initially. And that's going to allow us to execute a rapid, low CapEx return to free cash flow generation. Now, that mineralization is going to be initially primarily focused on zinc, right around 70% of the revenue. It will be coming from zinc, the remainder from lead and silver. But we seek to, over time, with a focused exploration effort, transition that to be a more silver dominant from a revenue perspective. There's particular interest and opportunities that we see in the mine at depth, and we'll talk more about that in a minute. And then using the free cash flow generation, or the free cash flow out of a restarted Bunker Hill mine, we're able to reinvest both in the Bunker Hill asset and land position through exploration, but also begin to expand our exploration and growth portfolio. And you're seeing us taking the first steps of doing that, with our London joint venture in Colorado, a historic gold mining district in Colorado that has some similarities to Bunker Hill, which we're really quite excited about. All of this, we need to keep in mind, is in the context of social and environmental performance. The mining industry is changing. This is no longer something that that is nice to have. This is fundamental to our strategy, and we think that there's tremendous potential and opportunity to be unlocked by coming into historic mining districts, some of which are distressed for environmental or social performance reasons, and approaching it with a very different and forward-looking approach. And really, what you can see here is that approach, which is mining will be, and sustainable mining will be, the core of what will be a renaissance in the surrounding community with opportunity, economic opportunity, and environmental performance. In a lot of cases, and particularly in Bunker Hill's case, just the act of us being here actively mining is going to be a net positive to the environment, and certainly will be a net positive to the community. Okay, now on to the specifics of our recent press release. And the first one I want to talk about is the EPA, because the EPA is a critical stakeholder. When the mine went into closure, it was the EPA stepped in and cleaned up over the last 40 years what was an environmental disaster. And what we have set to do is take that forward from a consent decree that was reached in 2017, which settled all historical environmental liability, and restructure the liability of $20 million for historic water treatment, and structure that in a way where we could meet that obligation out of free cash flow. Now, this has been a process of creating an enduring trust and relationship with the EPA. We talk to the EPA every week for multiple hours. And over the last year and a half, we reached a level of trust and we reached a level of engagement where we were able to work with the EPA to reschedule and resequence that payment obligation to be met out of cash flow. So a couple of key things to note is that there is no change to the consent decree. So that it is important to note that there is no historical CERCLA environmental liability. What we're talking about here is a rescheduling and a repayment of that $20 million of historic water treatment in a manner that allows us to restart the mine and meet that obligation out of cash flow. We're also purchasing the mine, and we've been talking about moving this direction for quite some time, but the agreement with the EPA in conjunction with the financing has allowed us to as well move forward and execute the purchase of the mine for $5.4 million. And I want to talk just a minute about what that purchase entails. What we're getting with Bunker Hill is an absolutely world-class mineral endowment. It's the largest mine by scale in the Silver Valley. And what's interesting is that it's also one of the shallowest mines in the Silver Valley. The Hecla mine, for comparison, is down around 9,000 feet. The Core Galena complex is down around 7,000 feet. The lowest level of the Bunker Hill mine is just over 4,000 feet from surface. And that represents a tremendous down dip exploration opportunity. And really starting up the operation in the upper areas of the mine with a mine plan that has strong economics is going to allow us to rehabilitate the mine using cash flow to reinvest in the operation, into that exploration and into that rehabilitation. We're also getting a tremendous mineral inventory, over 6.6 million tons in the measured and indicated category, with another 6.7 million tons of inferred material. That indicates that as we move into operation, that 11-year mine life has significant opportunity to extend. We think of Bunker Hill again as that cornerstone asset, and one that's going to be that cornerstone asset for many decades going forward. Definitely multi-generational in potential and scale. I'm going to turn it over to Dave, our Chief Financial Officer, and he's going to run through some of the details of the financing package that we announced.
Thanks, Sam. It's an exciting day to be able to finally release this to the market after a very comprehensive process, which we press released about 8 months ago together with Cutfield Freeman. So for those that have dialed into previous sessions, know what we were aiming to do, and we feel that we've done exactly as we intended to do, which is finance the majority of the mine restart in a manner that's non-dilutive to our shareholders at a favorable cost of capital, and allows us to unlock value. So I'll go through some of the specifics on the page there. It's a $50 million package that we've secured, and just getting the final documentation in place here over the next couple of weeks with Sprott Resource, Streaming, and Royalties. That is comprised of 3 instruments: a royalty convertible debenture, which starts out at debt bearing 9% interest, is expected to convert to a life of mine royalty on the property of 1.85% shortly after the full security package is put in place. The second piece, so that's expected to come in over the next few weeks in January. That will finance the purchase of the mine, which Sam just mentioned, the initial payment to the EPA of $2 million, and a small amount to working capital. Shortly thereafter, after we put the full security package in place, we expect another $5 million to come in the form of a convertible debenture. You can see the conversion terms there, 30 cents a share. Obviously, we've had a very favorable reaction in the market to the news that we put out, and the current share price is already above the conversion price. And so we fully expect that $5 million to convert to equity. That will allow us to continue the engineering studies. As you will have seen in the release, our plans to do a pre-feasibility study that'll fund that, as well as other working capital requirements to get us to a point of making a formal construction decision. At that point, we expect to draw on the multi-metals stream. The multi-metals stream is ranging from $27 to $37 million at Bunker Hill's option. It will be, assuming the full $37 million is drawn, it is a 10% stream on all metals produced. And as with most streams, the delivery price is 20% of the applicable spot price. And really, that $37 million, together with the 8 and the 5, we believe, and subject to confirmation in a couple of months' time when we expect it to come in, we do expect this package to provide the majority of the finance that we need to get the mine all the way to commercial production. Very important aspect of the stream as well that you can see on the page there. We do have the ability to buy back 50%. Actually, that doesn't say that on the page, but it's 50% of the stream that we can buy back. So if we draw 37 million, we can buy back 18.5. If we draw 27 million, we can buy back 13.5. And the amount of metal streamed goes down pro rata. So if we drew the full 37, it would be 10% going down to 5%. So there's a lot of flexibility built into this package. It's non-dilutive. and it allows us to get close to that commercial production, which we're very pleased about. So that's a nice segue into the next slide, which I think, you see in the headline there. This financing package unlocks the value creation that you see on the page here. Starting on the left-hand side, there's two takeaways from the slide. Number one, this is a demonstration of the optimization and the value creation that has resulted from over the last few months. You saw the PEA that we released in April, 101 million NPV. 5 months later, after a lot of hard work by the team on the ground, optimizing the mine plan and the mining method, that increased 42% to 143 million. We used pretty conservative metal prices in our PEA of $1.15 zinc, 90-cent lead, and $20 silver. You see the very significant impact if we use today's spot metal prices to over $300 million, particularly with zinc now above $1.60 a pound. So very exciting. As you can see on the right-hand side, that $300 million NPV does not include any mine life extension beyond the 11 years, or the 59% increase in M&I resources that we published a few weeks ago. Doesn't include the exploration at depth or any further optimization. So you see in the top left there, $43 million market cap for Bunker Hill. And we think this is a very exciting opportunity for investors to get involved at these levels.
Thank you, Dave. And I would just want to finish up talking about what the past year and a half since this management team has joined the company, what we've been working on, what we have achieved, and what's going to be coming down the road in the very near future. So when we got to and joined Bunker Hill, we saw the tremendous opportunity that that Bunker Hill had to offer, but we also saw that it was going to take a lot of work. When we got started, we had quite a bit of work to do. In the past year, we've cleaned up and revamped the board and management. We've worked on some legacy issues around governance and our listing. We've upgraded our listing in the U.S. We've gone out there, got our message out. We have research coverage. But here at the mine is where we've done a tremendous amount of work and accomplished quite a lot. In the past, before we got to the mine site, there had been essentially no technical work done since the mine went into closure in 1982. So we got to work, and the first thing we did is digitize all of that historic geologic information and data. There was over 3,000 drill holes, thousands of meticulously hand-drawn maps. We digitized all that. We created a really strong three-dimensional geologic model, and that pointed us in the right direction for conducting 3 drill campaigns focused on upgrading and verifying the historic SEC compliant reserve. On the back of that, we've done 2 PEAs. The latest one, that you just saw on the previous screen, with significant optimization and improvement in project economics. And we're continuing that work, and we expect that there will be further optimizations coming along. We've begun to fill our project pipeline, entering into a very low-cost option on the London Mining District. And what we're talking about today is the 3 big catalysts that are really going to propel the Bunker Hill story forward. That EPA settlement agreement, which is the culmination of over a year and a half's worth of engagement and interaction with the EPA, the project financing led by Dave, and the purchase of the asset. So that's where we've come in a pretty short amount of time. When you look forward, we're working on a mill acquisition. We're in commercial discussions on that front. We will see the technical report for the most recent mineral resource update coming out here just before the end of the year. Early in the new year, we're going to see the results of the geophysics study that we did and where that is directing us and what we're seeing coming out of that for the mineral potential of the larger claim block here at Bunker Hill. We're going to close the London joint venture. And on the mine side here, we are moving towards a pre-feasibility, as one would expect us to do, making sure that all of the engineering and technical studies are fully supportive of the move to construction and restart of the mine. All of the typical things that one would expect to see: ongoing geotechnical assessment, continued mine plan optimization, process plant, metallurgical optimization, paste, tails. And early in the new year, we also expect to be able to transition to the TSXV, ultimately leading to a construction decision, as Dave mentioned, early Q2. So with that, I'd like to thank everybody, and I think that we can move into the Q&A period and be happy to answer any questions that anybody has.
Wonderful. Thank you so much for that, gentlemen. As a reminder to the audience, you can ask any questions you like using the Q&A tab found on the right-hand side of your screen. We have had a number of questions come in already, so we're going to get right into it. First question to the team: roughly what is the accrued interest sum payable in 2029?
I can take that, Cameron. It's a very, to be honest, I haven't done the exact math, but it's a very low single-digit interest rate that applies to the liability. So we're talking less than 2% here. So about $250,000 a year of accrued interest. So that would probably come to about $1 to $2 million of total interest paying in 2029. I don't have that math right in front of me, but it's a very attractive interest rate.
Okay, thank you for that. A question from Mark: your EPA relationship sounds positive. Did you see any changes in EPA, its staff, or its attitude, or anything else with the change of USA national administration in 2021 from Republican to Democrat?
Thank you for the question, Mark. And what I have to say is that the EPA and the IDEQ, which is the state environmental agency, have been absolutely tremendous to work with. And through that transition, quite honestly, we did not see any change. Our discussions with them were very much technical in nature, and talking about and building a level of trust with our approach and our focus on the mine. And that we did not see any political element really enter into the conversations at all. Always very professional in nature, and we certainly appreciated the spirit in which the relationship was built.
Thank you for that. John has a question regarding any information you might have on any offtake agreements.
I can take that. So we've certainly initiated discussions with, as you would expect, a wide range of players, both on the smelting and refining side as well as the traders, and that, as you can imagine, has been an integral part of the potential financing discussions that we've been engaged in over the last few months. So certainly an offtake is a very important card that you do not want to play in the wrong way. I personally have, at the last couple of companies I worked with, negotiated a number of these deals, and we are keeping our options open at the moment. The exciting thing is, and we did quite a bit of work on this during the PEA, is we expect to have a very clean concentrate that can be marketed into Asia. The natural home for the concentrate most likely would be Teck Resources' Trail Smelter, which is shortly up the road. And certainly we're speaking with them and others about what the best options are. But keeping options open at the moment, and stay tuned.
Okay, great. Thank you for that. John also has a follow-up question regarding any potential additional water rights that might need to be secured moving forward to production.
I'll take that, Jonathan. The simple answer is no. There is water rights that are transitioned with the purchase of the mine. Those will be adequate for the operating plans that we have. On the waterfront, I do want to mention that at the moment, 1,500 gallons a minute of water comes out of the mine every day. It's treated in a water treatment plant that's operated and owned by the EPA, and then subsequently discharged into the environment at a very high quality. As we move forward, we'll be looking to take over that responsibility, and we think that that's the right step forward for everyone involved. And then in addition, the simple fact of us mining is going to continue to improve the water quality at the mine. As we begin to put our tails into the historic mining voids, where the acid generation is created, it's going to over time lessen the intensity of the water treatment that's required.
Okay, thank you. Mario wants to know when you expect production to start.
Right now, Mario, production is anticipated to start in late Q3, early Q4 of 2023.
Great, thank you for that, Sam. Anio wants to know, how will you ensure avoiding what happened to Arcana, where they misjudged the CapEx requirements and then had to do down round financings?
Well, I'm not an expert on Arcana, but what I can say is that the focus of the technical work is the first key step to that, making sure that we understand and we are ready to move forward and make that construction decision. And we have a great team of engineers and consultants that are helping us to reach those answers. And it's also, making sure that as we go along, that we build a team that is focused on execution and construction and building that team and that culture. And I think that one thing that the team that we have here brings to the table is a long track record of operational focus and success.
Great, thank you for that, Sam. Tim in the audience says this: as a former executive direct of the Northwest Mining Association, I know the state and the community is very excited about the possible future production and jobs in the Silver Valley. If all goes as planned, when do you anticipate production and job creation in the valley?
Yeah, thank you for the question, Tim. And I think that you're already seeing job opportunities being created in the Silver Valley. Over the last year and a half, the people and the team that we have had focused on bringing us to this point are the significant majority are local from the surrounding communities. And that's the great thing about the Silver Valley in northern Idaho. It has a tremendous heritage of mining, and there remains a skill set that is ideally suited to taking the mine forward. That being said, we do intend to and expect that to participate in continuing skills development and creating and going out of our way to make sure that economic opportunity, both through direct employment at Bunker Hill, but also secondary employment opportunities are available in the Silver Valley. So short answer is it has started already.
Great, thanks, Sam. Mark has a follow-up question regarding mill purchase. What TPD maximum size are you considering?
Thank you, Mark. At the moment, our mine plan is calling for 1,500 tons a day at a production rate, and that is really, pretty ideally suited to the geometry of the ore body and the geology of the mineralization. So, in that 1,500 ton a day range, which was the target production rate of the PEA and the subsequent PEA update.
Great, thanks, Sam. Gregory in the audience wants to know who, as an existing stockholder, they should speak with to discuss their existing shares of ownership.
I'll take that one. Greg, feel free. I myself, along with our head of investor relations, Caroline Peng, would be very happy to discuss. Not sure entirely what you're looking for, but if you send an email through to ir@bunkerhillmining.com, I would personally be very pleased to speak with you this afternoon if you're available.
Thanks, Dave. Clive in the audience wants to know if you're looking at acquisitions.
Clive, I think that certainly our focus right now is the restart of Bunker Hill, and that is definitely where our full focus and effort is at the moment. You can see that we do have an eye towards building a growth pipeline. You can see that with the London joint venture, and our eye is always open for opportunities as they come along. But our primary focus at the moment is certainly the restart of Bunker Hill. But stated up front, our strategy and our vision is to be a multi-asset producer.
Okay, thank you. Jason wants to know what the potential silver resource is at depth.
Thank you for your question, Jason. So to start that, I'll just give a little bit of background of the geology. There was two mineralizing events at Bunker Hill that define the mineral endowment. The first one was more zinc in nature, and that's characterized by a more disseminated type mineralization, very low silver, and mostly zinc. The subsequent mineralizing event was a silver galena mineralizing event, characterized by a bit narrower mineralization, and then where those two mineralizing events intersect, you get hybridization and enrichment across all three primary metals: lead, zinc, and silver. When you look at our resource, the grade of that resource is just over an ounce per ton silver, and that's really due to the fact that the zinc dominant portion of the is the predominant mineralization in the existing resource. Now, when you look down at the lower levels of the mine, there are multiple galena, silver-rich galena veins that are completely open at depth, and we are quite excited about the opportunity to go and explore for and extend that silver mineralization at depth. In addition, Bunker Hill has a history of high-grade silver mineralization being mined successfully through the entire vertical profile of the mine. In fact, there was historic high-grade silver mineralization that outcropped at surface, 25, 30 ounce per ton. So there still are interesting opportunities and exploration opportunities through the whole mine profile, including in the upper areas where our mine plan will be starting. So really what you're looking at is Bunker Hill has a depositional event that has a specific type of mineralization that is silver in nature, and a specific type of mineralization that is more zinc dominant. And certainly our focus with the exploration will be to explore and follow up on that silver potential and opportunity. It's also important to note, there was 165 million ounces of silver produced at Bunker Hill in its operating life. And that makes it the number 3 silver producer in the Silver Valley, which is one of the preeminent silver producing districts in the world. So we think that there is significant silver upside and potential. And we're just really excited about the fact that, we're going to be able to look at that from a standpoint of strong free cash flow generation.
Great. Thank you for that, Sam. Those are all the questions we've received so far, but I'd like to go around the room with you guys just to hear what you're most excited about with this latest release of information.
Dave, why don't you go ahead?
Sure, sounds good. And I'll sound like a broken record because I think you asked me that last time, Cameron. But I'll be relatively brief as well. But I'll come back to this slide yet again. And I think, up until this financing package was announced, this was, I think in a lot of investors' minds, this was sort of theoretical, right? How much are you going to have to dilute us in order to get this mine back into production? Now that they see what we've done, non-dilutive, shareholder-friendly, low cost of capital financing package, I think the path to the value creation that you see on the screen here is evidently clear. And it's a compelling value proposition at a $43 million market cap today, $300+ million NPV at spot metal prices, with massive upside from exploration potential, optimization, and mine life extension on top of that. So that certainly would be my takeaway. I'm a numbers guy, so that's the way I think. But certainly, I think it's a pretty exciting and compelling opportunity that's become more clear with this big news release we've got out there. And I'm happy to see that the market seems to agree.
Absolutely. Maybe Sam, a word from you.
Yeah, absolutely. So, what excites me the most is that, we've taken a major step forward into achieving a vision that, we all had when we came and joined this company. And that is that, mining is an important industry. It's important for the world's future, and it can be done differently in a very different way. When you look around the Western United States in particular, there is a long list of tremendous mineral endowments that are distressed for some reason or the other, usually related to past performance. And what I'm excited with and about Bunker Hill is that we've reached a point where we've moved forward and we're showing that with proper engagement, proper technical work, and a real focus on building partnerships, that latent value can be unleashed and realized in a way that is supportive of where the future of mining needs to go for the world, which is much more sustainable in nature and focused on delivering metals to the economy in a sustainable fashion. So I'm really excited that this allows us to move forward and realize the next stage of that vision.
Great. Thank you, Sam. We actually have had a question come in from Michael. Will this mine be conventional again in regards to air equipment, stopes, raises, etc., or are you considering any other means like diesel or electric?
So this mine will be rubber tired accessible on the mining front. And we envision that as we move forward, that it's going to be a fully electrified, digitally enabled operation, and one that is at the forefront of technology around safety, productivity, and certainly carbon footprint.
Absolutely. Ken in the audience also wants to know, when will the company become cash flow positive after paying for the environmental liability?
Ken, the company will become cash flow positive when we enter into commercial production, and that EPA liability will be paid out of that free cash flow, and then we will remain cash flow positive throughout the period where we're making that repayment.
Right, absolutely. Listen, I don't want to necessarily miss Richard on this, but Sam or Rich, do you have any final words for us before we wrap up for the day?
No, thanks, Cameron. Thank you, Sam and David, for an excellent presentation. Your question earlier was what makes me most excited about this. And again, I'll go back to the start. We pulled together a turnaround team, and that means we are really focused on the delivery of Bunker Hill. This has not been easy. And I just want to congratulate Sam, who moved down there, whose father used to work on the mine in the 1970s, bought a house, for his commitment that we've all followed and worked to support. Dave's been outstanding. Brad Barnett, not on the call here, for the work that he's done on all of our behalf with the EPA and other stakeholders, and getting that vision together has been instrumental too. Now, so what I say to you is, in the question, to answer the question, what do I find most exciting, is when you get really good people, as I would introduce this team to you as being, onto very difficult problems. They, with their commitment and open-mindedness, deliver results. So I just want to say that's what most excites me, because through them, they're unlocking this remarkable value. But thank you very much, Cameron, for everything you've done today, setting this up. Thank you for some great questions there. I really appreciate the attendance, and watch this space.
Thank you, Richard. Sam, maybe some closing words from you?
No, it's just a pleasure to talk to everybody, and we're really excited about where we're going to go from here. It's going to be, if anything, a more exciting 2022.
Wonderful. Thank you, guys. Well, listen, we'll be wrapping up for the day now. At this point, if you didn't get a chance to get your questions answered, or if you think of one after the summit, we'll be sending out a short survey where you can leave your contact information, and the Bunker Hill team can reach out to you directly. You can also find more information, of course, at bunkerhillmining.com. And with that, we're going to wrap things up for the day. I hope you all have a good rest of your day, gentlemen.
Thanks, Cameron.
Thank you.